This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, August 5, 2026, and this is the Tokyo session. Now, let's get into it. Bitcoin is sitting at $64,583, clinging to a narrow plus 0.7% gain, while the broader market holds its breath. The Fear and Greed Index is anchored in extreme fear at 14 out of 100, yet traditional volatility. The VIX is resting comfortably at 15.86. It is a study in contradictions. Price stability masking a massive retreat in leverage and sentiment. We have no scheduled economic releases or corporate earnings events in our verified calendar for this session. Instead, the market is reacting to structural shifts in regulation and institutional entry vectors. We'll see how these headlines interact with the current liquidity environment throughout the evening.
With no macro data releases to distract us, attention turns entirely to the flow of capital. Watch whether the Pay Nasdaq IPO filing acts as a gravitational anchor for Asian liquidity, or if the prevailing fear overwhelms the narrative of institutional adoption.
Here is the snapshot as of 1904 ET. Bitcoin remains the anchor at $64,583. Ethereum is showing relative strength at $1,905.83, up plus 1.8%. Meanwhile, we are seeing fragmentation in the altcoin space. Uniswap leads with plus 5.4%, while XRP lags at minus 1.2%, and Solana is essentially flat at minus 0.1%. The VIX is at 15.86, suggesting low implied volatility in equities, which contrasts sharply with the extreme distress in crypto sentiment. Let's look at the headlines driving this session. First, Iranian crypto outflows spike 700% after U.S.-Israeli airstrikes. Second, U.S. Senate housing bill includes CBDC ban. And third, PayPay, 40% owner of Binance Japan, seeks up to $1.10 billion in Nasdaq IPO.
That 700% spike in Iranian outflows is the most dangerous variable here. It's not just noise. It represents a rapid, chaotic extraction of liquidity that bypasses regulated channels. Combined with the CBDC ban, we see a market caught between geopolitical flight risk and regulatory rigidity. That creates the extreme fear reading without necessarily triggering a price crash. Yet,
I agree on the liquidity distortion, but look at the counter-narrative. PayPay's $1.10 billion IPO bid. That is a structured, institutional on-ramp. While Iranian outflows represent unstructured, high-velocity capital fleeing instability, PayPay represents slow, sticky capital entering the ecosystem. The tension between these two flows is why we see such muted volatility despite the fear.
So we have chaotic outflows versus structured institutional entries. How does that play out in the charts? Let's start with Bitcoin. It's trading at $64,583, up plus 0.7%. Grid, you own the technical structure here. What is the chart telling us about this consolidation?
It's telling us that price discovery has stalled. At $64,583, we are in a high-friction consolidation phase. The daily move is negligible at plus 0.7%, which means there is zero directional momentum. Support is currently passive. It relies on spot holders absorbing the void left by withdrawing capital. The key metric isn't the price level itself, but the fact that Bitcoin futures demand has fallen to 2024 lows. That leaves the order book thin.
and that thinness is exactly why I'm worried about the VIX. The VIX is at 15.86, which looks safe on paper, but it's ignoring the crypto-specific reality. When futures demand hits 2024 lows, you lose the cushion that normally absorbs shocks. If that 700% Iranian outflow triggers even a small wave of stop losses, the lack of leveraged bids means we could see rapid, vertical dislocation downward. The calm is artificial because the longs have already fled.
I have to push back on the idea that the market is simply waiting. The fear and greed index is at 14/100. That is not waiting, that is paralysis. The slight uptick in the 7-day trend from 12 to 14 is being misread by some as stabilization. It's actually a lagging indicator. The crowd is stuck. They aren't buying because the futures collapse signaled institutional exit, and they aren't selling because the price hasn't broken. It's a deadlock.
Paralysis is correct, but let's look at where the money is going. It's not in Bitcoin. Look at Uniswap. Uniswap is up plus 5.4% to $4.03. That is pure decentralized finance rotation. Capital is abandoning the store of value narrative tied to futures contracts and moving into yield-generating infrastructure. The drop in Bitcoin futures demand doesn't mean capital is leaving crypto. It means it's moving off-chain into specific protocols like Uniswap. The fear is concentrated in the derivatives desk, not the spot wallet.
That supports the stagnation argument. If capital is rotating into Uniswap and APT plus 2%, then Bitcoin's lack of volume confirms it's being sidelined. The chart at $64,583 is inert because the fuel leverage is gone. You can't break out of a range-bound box without volume.
Speaking of rotation, Ethereum is outperforming Bitcoin significantly. Ethereum is at $1,905.83, up plus 1.8%, while Bitcoin is barely moving. CIPHER, walk us through the flow dynamics here. Why is Ethereum stronger right now?
It's a structural preference shift. Smart contract liquidity is absorbing selling pressure much more effectively than the base settlement layer. While Bitcoin futures unwind, Ethereum is maintaining its spot integrity. The plus 1.8% gain isn't speculation, it's a defense of utility. Investors are prioritizing execution layers over the raw peg to traditional risk assets. This is a flight to quality within the crypto stack itself.
Technically, this divergence is crucial. If Ethereum holds $1,905.83 while Bitcoin stalls near $64,583, we are seeing the beginning of a relative strength breakout. The Ethereum/Bitcoin ratio is expanding. My read is that until Bitcoin regains futures momentum, Ethereum will continue to decouple and lead any minor rallies. It's absorbing the liquidity that Bitcoin is rejecting.
And socially, this aligns with the infrastructure narrative gaining traction over beta exposure. Retail sentiment, measured by the fear and greed index at 14, is still terrified of broad market exposure. But niche, functional applications like Ethereum and Uniswap offer perceived safety because they generate revenue or utility. The fear is keeping money out of Bitcoin, pushing it into Ethereum.
Be careful calling it quality. Core Scientific dropped after disappointing Q4 results. That mining equity stress often precedes hash rate dips and selling pressure on the underlying assets. If Ethereum's strength is built on speculative rotation rather than genuine network growth, it's fragile. A break below recent support levels could see that plus 1.8% advantage vanish quickly, especially if the VIX compresses further while crypto volatility expands.
Uniswap led the majors with a plus 5.4% move to $4.03. APT is also green at plus 2%, $0.59. Meanwhile, we have laggards like XRP at minus 1.2%, $1.06, and near at minus 2.6%, $1.69. Let's dig into this bifurcation. CIPHER, why are these specific assets moving?
Uniswap's surge is isolated decentralized finance liquidity accumulation. It's not correlated with Bitcoin's price action, which suggests it's driven by internal protocol metrics or specific large holder entries, not market beta. Conversely, XRP and NEAR are suffering from a lack of fresh narrative. XRP is acting as a sentiment barometer for stagnant risk appetite, while NEAR minus 2.6% decline shows that older infrastructure plays are being dumped in favor of newer, high-yield chains like Aptos. This is a cleanup cycle.
From a charting perspective, Uniswap's plus 5.4% move is breaking short-term resistance, whereas XRP's minus 1.2% is testing key support bands. The volume profile on Uniswap suggests accumulation while XRP shows distribution. The spread between the leader Uniswap and the laggard XRP is widening. In a low volatility regime like this where Bitcoin is flat, these relative performance gaps tend to persist until a broader trend emerges.
The sentiment behind Uniswap is purely speculative excitement, a rare bright spot in the -14 fear index. But look at Chainlink. It's down -0.6% to $8.15. Even Chainlink, a foundational infrastructure play, is bleeding. This tells me the hope is confined strictly to DEXs and specific L1s. Broad-based retail enthusiasm is absent. If Chainlink can't stabilize, the entire decentralized finance rotation loses credibility.
And remember that 700% Iranian outflow spike distorts all on-chain metrics right now. Any accumulation signal in Uniswap or APT could be noise from geopolitical capital flight. You're trying to find fundamental strength in a dataset contaminated by emergency liquidity transfers. Until that anomaly clears, treat these gains as potentially misleading.
We've covered the stagnation in Bitcoin, the rotation into Ethereum and Uniswap, and the structural fears driving the 14/100 index. Apex, tie this together. What is the dominant theme for the after-hours session?
The dominant theme is a fragile equilibrium driven by three conflicting forces. First, Grid identified that Bitcoin's $64,583 level is inert because futures demand hit 2024 lows, removing upward fuel. Second, CIPHER highlighted that capital isn't disappearing, but rotating into decentralized finance nodes like Uniswap and APT, which explains the plus 5.4% and plus 2% gains respectively, while broad caps like XRP lag. Third, SPECTER warned that the VIX at 15.86 is masking the risk of the 700% Iranian outflow shark, which could trigger a liquidity vacuum if spot buyers fail to step in. The synthesis is clear. The market is consolidating sideways not because it is stable, but because leverage is gone and capital is hunting for yield in isolated pockets rather than betting on direction.
To summarize, Bitcoin is consolidating at $64,583 amidst collapsing futures demand. Ethereum is showing relative strength at $1,905.83 as capital rotates into smart contract layers. And the market remains trapped in extreme fear at 14/100, exacerbated by geopolitical outflows and regulatory uncertainty. Tomorrow, watch whether Uniswap can sustain its relative strength or if the broader fear regime pulls it down with the rest. This is ShadowQuant Crypto Edition. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the London session, where we will see how these calls play out. Until then, trade safe.